You know, sometimes the most exciting business stories are buried in, well, pretty boring corporate documents. But we've dug one out for you. It's about a company called PG Electroplast, and they're basically a manufacturing giant that ran into a huge industry crisis. But instead of playing it safe, they decided to bet everything on a huge comeback. So, let's get into it and see what they're up to.
It's a really classic business question, right? Imagine your entire industry just stops. Everything hits a wall. Do you pull back, save your cash, and just wait it out? Or do you do something completely different, something kind of risky? Well, PG Electroplast's recent decisions give us a really fascinating real-world answer.
All right, so first things first, let's get to know the company we're talking about, PG Electroplast, or PGEL, as they're often called. Now, these guys are no newcomers. They've been a quiet giant in India's manufacturing world for decades, making a lot of the appliances that are probably in our homes right now.
Let's do a quick run-through of their history. It all started back in 1977 as a tiny little electronics components unit. From there, they just rode the electronics wave in India, going from making small TV parts to becoming this massive manufacturer for over 70 huge brands. So yeah, the key takeaway here is this is not some new kid on the block. They are a deeply established, super experienced company.
So, coming into this year, they were an absolute powerhouse. A go-to partner for all the big names in home appliances. Business was just booming. And then, bam! The market just slammed on the brakes.
This all happened in the second quarter of their fiscal year 26. Suddenly, there was this totally unexpected, really bad downturn. And look, this wasn't just a PGL problem. This was a full-blown crisis for the entire consumer goods industry. And this quote from their earnings call really nails the problem. They said they were seeing an elevated level of inventory in the channel. What does that mean in plain English? It means shops, warehouses, they were all just stuffed with products that nobody was buying. Demand completely dried up, and the whole supply chain was just clogged.
And the financial hit was immediate and, frankly, pretty brutal. Their net profit for that quarter, it crashed down to just 2.4 crore rupees. See, with sales way down, their factories weren't running at full steam. That means their fixed costs, rent, machinery, started eating up a much, much bigger piece of a shrinking revenue pie.
And just to make a bad situation even worse, they also got smacked with an 8.4 crore rupee loss from foreign exchange rates. So just picture this. You've got a sales crisis and a currency crisis hitting you at the exact same time. It was, quite literally, a perfect storm.
Okay, so things are looking pretty grim, right? What do you think they did? This is where the story takes a fascinating turn. Instead of pulling back and playing defense, PGL decided to go all in. They doubled down.
And you can really see the tension here. On one hand, you have their annual report, which was written before all this happened. It's all about a booming market, scaling up, big plans. But then you have the earnings call, which is talking about sales falling off a cliff. Now, faced with that reality, most companies would probably say, okay, let's pause the big vision. But not PGL. They stuck with it.
And this is the really crucial part. Even after that absolutely disastrous second quarter, the management team stood their ground on their targets for the entire year. They're still projecting huge revenues and a net profit of over 300 crores. That is a massive signal of confidence. They must believe the market is about to come roaring back.
But here's the thing. They aren't just sitting around and hoping for things to get better. Nope, they are actively investing so that when the recovery does come, they're ready to completely dominate. They are literally building their way through this storm.
And get ready for this number, a planned 1,000 crore rupee investment in new projects over the next few years. That's a textbook counter-cyclical move, spending big money right in the middle of a downturn. It's an incredibly bold strategic play to leapfrog the competition.
So where's all that cash going? Well, they're building a huge new refrigerator plant down in South India. They're massively expanding how many air conditioners and washing machines they can make, and they're adding whole new plants for coolers and specialized plastics. Basically, they're strategically beefing up all their key product lines, getting everything ready for that big rebound.
When you put it all together, what you have is a really high-stakes strategy. For this whole thing to work, two things absolutely have to happen. They need to execute perfectly, and the market needs to bounce back in time.
And that's really the heart of their gamble, isn't it? PGEL is willing to take some serious short-term pain because they've got their eyes on a massive long-term prize. Think about it. While everyone else is panicking, They're investing. They're setting themselves up to grab a huge chunk of the market when things turn around. And the big advantage? The moment demand comes back, they'll have brand new, super efficient factories ready to fire on all cylinders while their competitors are still trying to figure out what to do. So this all brings us to the big, final question. PGEL has placed this enormous bet on the future of the Indian consumer. The factories are going up, the capacity is getting bigger, but will the market, will the customers show up in time to make it all worthwhile? Was this high-stakes gamble the right move? I guess only time will tell.